G'day folks, welcome back to another episode of Euro Mining News. Today we are talking copper, everything to do with copper. The copper price going through the roof, how that affects mines globally, how that affects the European market, and basically what's going on in China as well. There's always something going on in China that's affecting commodities, and once again it's happening here with copper. So copper has really been making some waves lately. It's hitting a new high that hasn't been seen in almost a year, crossing the $4 per pound mark once again, or if you're more into tons, above 8,000 US per ton. There's a few factors driving this. One, Chinese smelters scaling back production. Two, global miners, big heavyweights, are experiencing some operational issues. Three, the green transition just requires a heap of copper. And four, the price of getting it out of the ground is going up. But we'll talk about those four things in more detail shortly. So why has the copper price moved so suddenly? Well, it seems like folks in the market are starting to wake up to a big problem. There's a serious shortage of primary copper supply that's looming on the horizon. Unlike some other industries, the mining game doesn't pivot quickly in response to demand. It never has. So to get more copper flowing, we need to invest in new mines. However, there's a catch, because that's going to take a higher copper price to make it worth the risk. But hey, copper's not just any old metal. It's the lifeblood of the green energy agenda, as they say. Without it, those transitions we're talking about just aren't going to happen. Furthermore, with China throwing almost $140 billion into the ring to focus on its green energy transition, that's only going to drive up the demand for the metal even more. So naturally, copper is getting some well-deserved time in the spotlight. Now, despite the growing demand, copper miners aren't exactly rushing to kickstart new projects like they did previously. Some see this as a good thing though. It shows that they're playing it safe, waiting for the market to really scream for copper before they start digging it out. With cost hikes and basically just a general aversion to risk that's gone with the fluctuations of the price over the last years that are playing into this cautious approach. Several major providers are saying that to get the ball rolling on this new supply, though, copper prices are going to need to break $5 to $6 per pound, or above about 11,000 US per ton. And this is partially due to increased costs. So ANZ Bank, or the Australian New Zealand Bank, they crunched the numbers and found that it's getting considerably pricier to produce copper worldwide on average. So over the last 3 years, the cost to make a ton of the stuff has jumped by over 30%, hitting an average of $5,600 per ton. And even though prices due to inflation are starting to flatten a little bit, the folks digging up the copper are still dealing with these rising costs for workers, energy, transport, everything. So we're currently seeing fresh highs of $4 per pound, and most miners need upwards of $5 to $6 per pound to bring new projects online. Now that's a pretty serious increase in the copper price required. So how long is that going to take? Well, recent trends in other commodities, if we look to lithium, that had an absolute tearer in 2022, and don't know percentage increase, but it went up quick. Uranium 2023, look at that, went from $50 a pound up to 100 in less than 6 months. Iron ore, that thing's just jumping around like a yo-yo. And even the safe haven asset gold is tearing up at unprecedented rates of increase. So if we look at these other commodities, it could suggest that the price could shoot up faster and harder than anyone actually expects it to. Now, I said right at the start that the Chinese smelters are scaling back production. I wanted to dive into this a little bit deeper, as it didn't really make a lot of sense to me when I first started reading into it. So I've read reports suggesting that treatment and refining charges of these smelters, the Chinese smelters, have become negative. So this is pretty remarkable because it basically implies that smelters are compensating mining companies for the opportunity to process their concentrate into a refined metal. So this scenario is kind of reminiscent for me of the negative oil prices that occurred in 2020, where the demand for oil fell so rapidly due to government shutdowns from COVID and just not the need for oil, from $18 a barrel all the way down to negative $37 a barrel. So this is the first time oil was ever been negative in history. So this could be a kind of analogue for copper smelters, indicating a possible desperation among smelters, basically just to secure sufficient raw material to keep their heads above water, keep the lights on, and continue their operations. So you may ask, how are treatment and refining charges actually set in China? Well, they are negotiated between the major concentrate producers and a group of smelters in China. So your producer in Australia, in Sweden, in the US, talk to a group of smelters in China, which all talk within to each other. Now, they're all pretty friendly with one another, is a good way to say it. And they make consensus decisions as to setting the prices for smelting. Now, once they got together and talked about it, they set a benchmark price in these negotiations, such as the recent deal between Xinjiang and Antofagasta, which established a rate of over $80 per tonne, which then serves as basically more of a guide for the rest of the industry. Now, remarkably, within just 4 months of establishing this benchmark of $80 per tonne, the treatment charges plummeted by 80%, hitting record lows according to market data providers. Now, in a free market, not like China, in a free market, one would expect a reduction in smelting capacity, leading to some smelters shutting down, which would eventually bring treatment charges back to an equilibrium price and everyone's happy days. However, the current situation in China is a bit unusual, where state-run smelters are being kept alive through cross-business cooperation to keep everyone's lights on. And additionally, in 2024, China is expected to intensify its cooperation with India for competition with India for raw materials. So recently, Adani's in India commenced operations of the inaugural unit of the Kutch copper smelter, valued at $1.2 billion. Now, the facility is poised to become the world's preeminent single-site copper smelting operation, boasting an initial annual capacity of 500,000 tonnes, with plans to extend to 1 million tonnes in the project's subsequent phase. To add more fuel to this copper squeeze flame, basically, is that there's been a bunch of major copper miners globally that have faced numerous operational challenges recently. The copper industry was significantly impacted by the closure of the First Quantum's Cobre Panama mine last year. That shook the entire industry following extensive protests in Panama. Now, that mine is valued at $10 billion and is responsible for producing approximately 350,000 tonnes of copper concentrate annually, representing about 1.5% of global copper supply from that one mine, and it's shut down. So that's big. Additionally, Anglo American has reduced its production forecast, citing poor ore quality and elevated expenses, prompting the company to lower its 2024 production goal from 1 million tonnes to a range of 730 to 790,000 tonnes. So that's over a 20% decrease. According to ING Bank, the production at Escondida, the sole copper mine with an output exceeding 1 million tonnes annually, is projected to decline by a minimum of 5% by the year 2025 compared to its current levels. So we've got these major players that are all dropping their guidance figures, reducing the supply even further, pushing the price up. Now, considering the broader picture, why is this significant? And how does it affect the copper prices? So theoretically, there's an inverse relationship between copper prices and treatment charges. So as treatment charges decrease, the copper price should, in theory, increase. However, the reality tends to be more complex than that. Many large mining companies operate their own smelters and aren't bound by these contracts, among other factors. But generally, when treatment charges are low, it signals a need for more copper, suggesting a shortage of copper concentrate supply. Now, over the past month, this theory seems to hold, as evidenced by the rising copper prices. The collective behaviour of major Chinese smelters, akin to OPEC's strategy on oil supply cuts, typically involves coordinated supply reductions and assigned quotas. However, there are reports of some smelters deviating from this collective approach to prioritise their own interests. This divergence makes sense when considering each smelter's unique cost. Now, this copper squeeze is potentially going to happen. I wanted to look into the opportunity this has for Scandinavia in particular, because Scandinavia is definitely no stranger to copper mining, especially with Sweden's long-standing relationship pulling copper from the famous Falun mine, which contributed significantly to the Swedish economy for centuries and is even a mineral hub nowadays. Also worth noting is Norway's recent seabed minerals discoveries, including copper, which could also influence the European copper market pretty drastically if they come online. Now, if we bring the spotlight to the Swedish copper miners, Boliden is the big dog. They with their Aitik mine, it's the number one producer in Sweden, and it's not just the number one producer in Sweden; it's the number one producer in Europe, if you disregard Russia, as far as open pit mining is concerned. So they could stand to benefit from these rising copper prices substantially. But the other one to keep an eye on is Copperstone Resources. Now, these guys own the Viscaria project up in Kiruna, which is an old mine that stopped production in the 1990s after the copper price went through the toilet. Now, the Viscaria mine is currently undergoing extensive infill resource drilling to boost its resource and reserves before it launches into mining in 2026, where it's expected to produce 30,000 tonnes of copper per year. So if this copper squeeze does occur over the next 6 months to a year, they will stand to benefit quite a lot from this as well. So that's all I've got on copper today, folks. Hope you enjoyed it. As a disclaimer, these opinions are simply my own. They are not Euro mining news in any manner. I am not a financial advisor. This is not financial advice. I'm just a geo giving you my take on how things are progressing in the copper market. So don't take any of it and do anything crazy with that advice. Thanks for tuning in, and we'll see you all next time.